Hi, Harry here for the Rant on November 29th. Well, I'll tell you folks, very simple. We are in something that is truly unprecedented. A lot of what I do for a living, is research all of history as far back as I have to go to identify what cycles are important, what cycles are fading or growing or becoming more important or less, so we can constantly help see the future. And the truth is there's always a precedent. There's a precedent for something like this before, and there is a precedent for this super bubble we've seen. It's the 90-year cycle, okay? It's the most powerful of all the cycles. We have our 39 to 40-year generation spending cycles. We have this 45-year innovation cycle that when it doubles becomes this 90-year cycle. That's, and so innovation and technology is the other thing, along with aging and becoming smarter and more educated, that drives our economy and growth. So what we've had here, very clear peak, something I telegraphed back in the early 80s, that late 2007 would be a peak of the giant baby boom spending wave. And that happened. And 2008 was the worst recession in a long time for good reasons, okay? But we've also had a second cycle, the innovation technology cycle. That's 45-year clock. Now those clocks were aligned in the 1929 top, pretty close, okay? But they have separated since. So that cycle has continued to be strong, and that is the bubble cycle. And that didn't peak until late 2019, early 2020 approximately, okay? So what's really unprecedented now is that we have a first peak in 2007, expected. Downturn expected, stimulus expected, but not 15 to 16 years and $27 trillion, more than 1.5 times total GDP. This is what's unprecedented. They didn't even stimulate in the Great Depression. It wasn't what the Federal Reserve was supposed to do back then. The Federal Reserve was a new entity. Well, now the Federal Reserve has much more power, and it started with Mario Draghi and then spread to the Federal Reserve here. We will print unlimited amounts of money to stop a recession or stop short sellers from beating up the stock market and et cetera, okay? So now, since COVID, and I call this kind of the third phase, so 2007 demographic top, 2019-20 technology innovation cycle top. Well, now we had what I call the overreaction to COVID. COVID was like so stark that, out of the 27 trillion over the last 16 years, 11 trillion of it came in the 2 years after COVID. And so now this is hitting, and again, this is what makes this something that has never really fully happened in history. And so we have to just know a few things. Any bubble like this is going to burst. And one thing I do know, studying every bubble in history, everyone has burst, and the bigger the bubble, the bigger the burst. And this one, again, what is most unprecedented, this one was 100% artificial, okay? Roaring 20s bubble happened in good demographic and technology cycle times, okay? So did the 90s first tech bubble we've seen in our lifetime. That happened when all our cycles good. There was no big government stimulus back then. In fact, there was hardly any. This has been 100% that $27 trillion in stimulus, okay? So now, again, 2007 top, natural. Late 2019-20, also natural, but expected maybe only to come back to those 2000 levels at best by history. And of course, we had way more than that because of this giant stimulus, okay? So what this makes, people, is 2025, I think, is gonna be the make or break year. This $27 trillion has happened, but we finally got 9.1% inflation from that, and that's why they have finally tightened now. And people are now asking, economists are scratching their heads saying, well, wait a minute, the biggest tightening in over 40 years, only comparable to 80-81, and that was the worst recession we had since the Great Depression back then. Why isn't this tightening making a difference? Well, I'll tell you why. I look at my demographics, and guess who is just entering their first big surge in spending? The millennial generation. Now, unlike most people give the impression, millennial generation, bigger than ever, going to take us higher than ever. No, the millennial generation just extends a long top in the United States and the developed world between 2007 and 2037, okay? The demographic top, and then the innovation top, and now we have this COVID stimulus top into late 2024, and we're due for a major deflationary debt bubble shakeout, which is overdue now by 5 years. This should have happened 2020 to 22 on the natural cycles, okay? So this 27 trillion and continued, this 11 trillion extra since COVID has pushed this out 5 years. So we do know this bubble's gonna burst. We don't know exactly when. That's, again, makes 2025 the pivotal year. I clearly favor that this thing's finally gonna blow here, okay? Because they have so overextended. It's gonna look very funny if they have to come back and not only curtail the easing, but turn around and tighten again. Because why would inflation continue to go down when the millennials are now going to give a jolt to the economy? And again, when I look at the whole millennial surge, and that, again, we'll show a lot more in the December newsletter and in other newsletters ahead, but the millennial surge has its strongest first year in 2024 on a 47-year lag for the spending wave, because over time, more people going to college, especially women, has extended the peak in spending. It was 44 for the Bob Hope generation. I mean, all the tops there, 65, 68, 72 correlated with that 44-year lag. And then the whole 46-year boom in the baby boom correlated extremely closely into 2007. Now, I am just assuming, because I had hard, cold proof with deep analysis, that 46 was the exact peak in spending for the baby boom generation. I am simply assuming it's moving to 47 by now because, again, more people have gone to college. Men have already peaked in their rate of going to college, and women look like they're just peaking about now. So I think we've probably seen most of this. 47 is the best assumption for that, and 47 says the reason this stimulus didn't work so hot was the millennials came in and started their big surge and their strongest single year in 2024. Okay, so that'll wear off a bit, but again, you cannot have a bubble of this magnitude and not burst. And what is most unprecedented about this bubble, it is now going on 16 years. Okay. Every bubble in history blows out within 5 to 6 years, every single one of them, okay? And they have normally come in really good times on our demographic, the generation, and the technology cycles, okay? And it hasn't been primarily because of stimulus, okay? So this is 100% stimulus. This stimulus is pulled back. They are starting to ease back on their tightening, but they're still, you gotta remember, we're still not at neutral. Okay, they went to 525 basis points. Neutral would be about 300, okay? Well, now we're down at, 450. We're still on the tight side, and they're gonna loosen some more, but now they may not. So I think this does come to head in 2025. We have to be patient. I think that hopefully things will become more clear. Again, and I just have to apologize for this, but I didn't cause it. The most unclear time in history. This stimulus has so perverted our economy that all the natural cycles, even the great decennial reliable cycle, isn't working here until we flush this stuff out. So I think that it's going to take probably late January or early next year to see, does this tightening really start to hit? Does this we start to feel this or not? And that's why 2025 is a pivotal year. And again, it's better to be safe until then, and then I will just keep you updated. If it's time to get back in the markets, and I've already said in the newsletter, people can get back in here for a while. You just have to have a short trigger. Okay, so again, unprecedented time. That just makes more opportunity for people to understand what's actually going on, and this bubble will burst. I'll keep you updated. And on a different note, many of you know my good friend and longtime market expert, John Del Vecchio. What you might not know is that John is also a forensic accountant, a skill that allows him to develop an incredibly effective trading system, which he now calls fast profits, FAST. Over the years, John has used this system to trade very profitably, and it's one I personally and wholeheartedly endorse. For Black Friday, John is offering a special discount on a subscription, and he's sweetening the deal by including his top and bottom 50 FAST model, valued at $7,900 as a bonus. You don't want to miss this opportunity. Just click the link in the description below to learn all about it. And finally, guys, on behalf of the whole Dent family, we want to wish you a very safe and happy Thanksgiving holiday.